What is going on, investors? Hopefully you guys had a great day out there. Time to talk about Facebook, baby. One of the last of the FANG stocks to report during this reporting period. Ticker symbol FB. Over the last year, stocks up 57%. Year to date, this thing's been ripping higher, up 34%. Now, what we saw last week when Twitter and Snapchat reported, we saw Google and Facebook react to those earnings and actually went up quite a bit. Now, in the after hours trade, this stock's down pretty big. I got it 2% over here and 3% on another website. Either way, we are falling from the highs that we made earlier today on this stock. So we'll talk about this from a technical perspective. Have we broken trend? Notice that we were in a sideways consolidation pattern. If you follow us here on the channel, every Friday we recap all the FANG stocks, including Facebook. And really, since we've started that show for almost a year now, this stock has been going sideways, but once it broke above $300, it went off to the races, up all the way very close to $380. Now, in the after hours trade, we're seeing this pull down to about $360. We'll talk about if that has broken trend. The other thing we'll do on today's video is we gotta look at these numbers. These are absolutely phenomenal when we're talking about most of the FANG stocks, particularly the tech companies in that group. These numbers are fantastic, and in my opinion, reinforces why these stocks should be the cornerstone of your portfolio. Look, if you just invest in S&P 500 funds, they basically are the cornerstone of your index fund, okay? But if you want to invest in individual stocks and not just index funds, still, you want to make these companies the cornerstone of your portfolio, and I'll explain why when we get over to the numbers. Now, the stock is dipping in the after hours, but like I said, we've had a monster run year to date. We've had a monster run just in the last few months on this stock. And we had a big run last week when Snapchat and Twitter posted earnings, and then Google and Facebook kind of piggybacked on those earnings. Now, we did see user growth. It came in at a 7% growth year over year. I think we've all gotten comfortable with the fact that Facebook is a mature product, okay? Similar to maybe where Netflix is as well, at least here in North America in particular. Everybody that has a Facebook account probably logs in and uses it to the degree that they're going to use it now and into the, distant future. Okay. Now, can Facebook acquire companies, create new products, create new services on their platform to bring those users back? Certainly they can, but we'll talk about how, from a regulatory perspective, we talk about it especially on our FANG stock recap show, where it's difficult. Okay. These companies, especially Facebook and Google and even Apple and Amazon, they're under fire from Washington, D.C. It's not one party or the other. It's both parties just are attacking these companies, and it is going to be very difficult for a Facebook to pull off a big acquisition, at least in the online advertising / social media space, because Washington is providing so much scrutiny. We'll talk about that here in a second when we go through these numbers. This company, as you can imagine, has tons of cash, and so we got to start thinking about, as investors, if they're not going to be able to do acquisitions, well, what are they going to do with that cash? And it is your cash as a shareholder, and so we'll talk about that here in a minute. Now, let's jump into the statement of income, which is essentially revenue, profit, loss, those types of things. We've got our 3 months ended here. Right-hand column is 2020. That's last year on a 3-month basis. Left-hand column is our most recent quarter, so that is right now. 6 months ended, since this must be Q2. We've got a 6-month view year over year on the right-hand columns. Now, in terms of our revenue, it's right here on the top line. We went from 18.7 billion, and I thought that was fantastic. Well, guess what? That grew about 56% to $29 billion. I don't want anybody to just gloss over that. So if you're not awake while you're watching this video, wake up a little bit. Facebook grew their revenues 56%. So before you run out and buy the latest penny stock or whatever hot stock out there that has some revenue growth, realize that the behemoths are growing at 56%. And we'll get to in a minute that wildly profitable share buyback, tons of cash, no debt, all those types of things. That's why this is a home run stock. Now, one thing that I do want to make you aware of is, just like with Alphabet and Google, the CFO came on the call later, and Facebook walked through this actually in their press release, and they'll probably talk about it more on the conference call, is they are not expecting 56% year over year growth in the third and fourth quarter and even into next year. They saw great growth heading into the Q3 and Q4 quarters of this last year in 2020, and they're looking for that growth to decelerate modestly. So they're still going to grow, but we're not going to see 56% growth. So I just want to emphasize that, yes, this is impressive growth. I absolutely am impressed by it, but just keep in mind that it's likely not going to continue. If it does, I would expect this stock to just rip even higher. Now, take a look at this. This is why we love stocks like this. Cost of revenue. We only had to spend $5.4 billion to make $29 billion. I just did a video on Boeing, and to make about $29 billion at Boeing, they have to spend like $23 billion. So this just shows you why these tech stocks are at the cornerstone and should be at the cornerstone of your portfolio, because they have just massive margins, okay? To get this revenue, they barely have to do anything. They have to turn a couple computers on. That's obviously a joke, but not in the largest sense. Now, research and development went from $4.4 billion up to $6 billion. Again, you're growing your revenues by 56%. You'd expect these other costs to come in a little bit higher as well. But take a look, marketing sales, like basically flat, up a little bit, couple $100 million. General administrative, also relatively flat, up a little bit, obviously, but relatively flat. So we've got our total costs and expenditures. Again, we went from 18 billion up to 29 billion. That's 56% growth. We grew our costs just in the last quarter from 12.7 billion up to 16.7 billion dollars. So we added over $10 billion to our top line, and we only added about $4 billion to our cost and expenses. So you better believe income from operations right here went from $6 billion, and it more than doubled to $12.37 billion. This, again, is why these stocks are what I tend to focus on here on the channel, and why I encourage you to build your portfolio around these types of stocks. Stocks that grow their revenue very quickly, that is checkmark number one. But there's a lot of stocks in the stock market that are growing their revenue quickly. The second box you need to check is massive gross margins. That's here on our cost of revenue. So you spend $5.3 billion to make $29 billion. That is massive gross margins. Just read these words as written. Imagine if you ran a small business where all you had to do was spend $400 to make $29,000. Some of you guys watching this video probably make $29,000 in a year, or somewhere maybe half a year. Okay, imagine only having to spend $5,400 to make that. So that's why these numbers are so impressive. So you look for revenue growth, that's checkbox number one. High gross margins, that's checkbox number two. And then you look for it to flow down. If you want to come all the way down to net income, you can. That factors in income taxes and other types of income. I tend to stop at income from operations. You want to, off of $29 billion, not quite half, but almost half, $12 billion flows all the way down to income from operations. And if you want to come all the way down to net income off of $30 billion worth of revenue, about a third of it flows down to net income. Again, go out and find companies that do this, and you will see stock charts that do this type of thing, okay? And then even back in March, this was like $142 stock, and now it's at $360, okay? And it's because of these types of numbers. This is why here on the channel, I emphasize these numbers so much. We're not doing these videos for views and clicks. Believe me, there's dozens of other topics and ways I could present videos to get lots more views and clicks. I am doing this to make you a better investor. And these are the things that you want to look for when you look at stocks. And when you see them, you want to come over here and then analyze a stock from a technical perspective. You get any kind of pullback, into an area of demand or support for a stock, and it tends to be a buying opportunity. Now, the other reason why a stock like Facebook is just absolutely fantastic is you get down here to the balance sheet. So here's the end of the year, or basically the beginning of the year of 2021, and we come 6 months into June 30th, 2021. The company has, I'm not great at math, but that's like over $60 billion worth of cash. They got another $11.7 billion in receivables as well. This is a company with in excess of about $70 billion worth of cash. You come down here to the total liabilities. This is every liability. Imagine paying off every car you have, your credit card, your mortgage, your student loans, whatever it is. Imagine paying everything off, okay, or totaling that number up. In Facebook's case, it's $32.3 billion. I just showed you in a quarter, they do $29 billion. In a quarter! The company does $29 billion worth of revenue, and total liabilities at the company is only $3 billion more than that. Not to mention that this company has more than that, way more than that in cash. They have almost double their liabilities in total liabilities in cash. It's not one liability, it's every liability the company has. So again, you want to do your check marks up here when you're looking into a new company to buy as like a buy and hold investment. When you're trading, I'd ignore all these numbers and just come over here and learn how to read charts. Okay, but if you're looking for a buy and hold investment, you're looking for strong revenue growth. You're looking for high gross margins. So that means low cost of revenue versus our total revenue up here. Then you're looking for that money to flow down to either net income or income from operations, whichever one you decide to look at. And then if you back that up with a crystal clean balance sheet, which Facebook has, it probably is a triple check mark, and it makes investments like these, in my opinion, no-brainers. Like we talk about, we're looking for pullbacks in this stock to add to more of our position. Now, moving on to their cash flows. As you can imagine, we pull down this net income number. This is for 3 months. We've got our 6 months on the right-hand column. So our net income was $10 billion, but they do pay their employees with a fair amount of, I tell you what, if I worked at Facebook, I would take shares of Facebook in lieu of every single penny that they wanted to give me. But, look, $2.5 billion. I got another $2 billion in depreciation. We've got, in terms of net cash provided by operating activities, at $13.2 billion. I don't think that is how you analyze this company, okay? The reason why we're going to look at cash flows is I talked about Facebook has this like $70 billion in cash. And we talk about it regularly on our Friday show where we recap all the news for all the FANG stocks. And every week, okay, some politician somewhere in the world is trying to come after Facebook. And I'm not here to sit here to say they're wrong or they're right. I'm here as an investor to figure out if Facebook's in a good position to advance their business going forward. One problem with the politicians constantly coming after Facebook is they are not going to be able to use this cash for acquisitions, at least a major one. Okay, Facebook's not going to be able to go out and buy TikTok. They're not going to be able to go out and buy Snapchat. They're not going to be able to go out and buy some major social media site or even maybe a network of like online advertising websites or those types of things. They're just not going to be able to do it, okay? The regulators just aren't going to allow Facebook to do it. So they're going to have to grow organically or potentially get into other products and those types of things. You look at the Oculus and those types of things, it could be that that's where it is. One thing that they are doing with their money is they're repurchasing the shares. I believe, this is off the top of my head, I think they have a $50 billion, that is $50 billion with a B authorization on rebuying the stock. We see over the last quarter, they bought about $7 billion worth of stock. That's way accelerated over the previous period at $1.37 billion. Over the last 6 months, they've bought $11 billion worth of stock. In the previous 6 months, they bought back $2.6 billion. So you see here that Facebook bought $7 billion worth of stocks over the last 3 months. And what has the stock done over the last 3 months? It is absolutely ripped higher. And again, you want to double check this, but I believe this company has a massive buyback in place. And so I think just this $11 billion is still just a fraction of what they're able to execute on that. So we'll see what happens with Facebook, but they are going to create value by these fantastic earnings, fantastic margins, fantastic, crystal clean balance sheet. They're not going to be able to grow the company, through acquisition and those types of things, which I think is disappointing as an investor, as, somebody that looks at politics and those types of things. Maybe it's fair, maybe it's not. I don't know. It's not really for me to decide those types of things. Now, what we can decide is we come back here to Facebook. We're seeing here in the after hours, stocks ticking off about 2.8. It's swinging between 2.5%, 3% down in the after hours. Have we broken trend? Will this thing go lower? In the short answer is no. Okay, I put this big red line here. This is just to show you about where the stock is right now. Since some of you might be watching this on a phone, it might be kind of hard to see where the stock is. So I'm hovering my cursor right now on where the stock is right now. Before the earnings were announced, we were up here at about $375 per share. Now we're down here at about $258, $260 per share, but we're still in this uptrend. Okay, notice back here, this was back in April. The stock was at 330 and it sold off in a matter of like a week. Went from 330 down to 300. That's a 10% drawdown in this is probably like 2 weeks of trading. Okay, the trend was still not broken at that point. Okay, then this thing went from 300 obviously up to 380. So if you would have sold this time, obviously if you're a trader and those types of things, these pops and drops are what you kind of live on. But in terms of buying the dip, in terms of the uptrend being over, no, it's not over yet with Facebook. It has really hit a level of support. Really, you're looking for a break for the trend to really be over. I've actually got a line in here already. I'd look for the stock to get in this 330 range. It might be 340, but 330 to 340, we could maybe put 2 lines in here. We're looking for the stock to pull back into this range for this uptrend, in my opinion, to be broken, because we will have broken through these lows right here. Then we have all of a sudden made a lower low. Okay, that's what you're looking for when a trend breaks. Okay, you have a low, higher low, little bit higher low. This is where we almost broke trend right here, but then it rallied, higher low, come up here. If the stock stalls out here and resumes an uptrend, well, it's just another higher low and this thing will move higher. So technically, I'm not I wouldn't necessarily want to come out and buy this on a 2% drawdown. I'm looking for bigger drawdowns. Again, we've seen over the last year, you had a drawdown back here. This was back in like September of last year. You went from 299 all the way down to 246. I like that kind of move. Same thing here. You were at 295 and you came all the way back down here to 245. Okay, similar type of drawdown here. You saw 330 back to retest this level here at 300, and then boom, you rocketed upward. So now, lastly, I would expect Facebook and really all the FANG stocks, they're not going to go up forever. That's the first thing to understand, that these things will pull back and, in my opinion, at some point form a consolidation pattern. At some point, we are going to go sideways. Now, will it be as long as our last sideways consolidation, which really lasted from about August of last year to right at around March of this year, for a really long time? What is that, like almost 6 months of sideways consolidation in Facebook? Could we do that again? Absolutely. Could we do it again at a higher level? I absolutely think that's possible. So we'll see what happens with Facebook. Obviously, we'll be here on the channel every Friday recapping these stocks. So if you're not a subscriber to the channel, I'd really appreciate it. And I love all your support and your comments. Just want to thank everybody out there that has supported the channel over the last year. We'll be with you again soon with more videos. Good luck with your investments.